How's that? Good morning. Welcome to the London session. I hope you're doing well. Okay, so we have another Thursday come upon us. Let's look at what the market has for us. So dollar index, it's stuck in a consolidation, and it's making it pretty hard, I think, for this week, right, to trade. And I hope on Tuesday I did say this: be careful this week, because this is a week that um, generally you see market consolidating. So when that happens, it kind of tends to give hardship in terms of predicting where price is going. So just be careful out there. um, what I expected to see on all markets, I showed you the pairs that I was interested in and the outcome that I was looking for. And if you look at the pairs, right, this one is slightly heading towards to that direction, or that um, target that I gave, which is this low here, this one and that one. But it hasn't been quite easy for an entry. The entry came in at midnight, late in the afternoon. um, I saw it late. I actually was looking at my charts, and then that was the entry for this week. And why was this the entry? Basically, initially I was going to, or yesterday during our live session, I was using this range here, okay, and the fact that price was pulling back for the entry to go and attack this low, but we happen to get stopped out, and then you can see where price is. So when price stopped me out, I was like, okay, I'm no more interested, I'm just gonna chill. And the time price came here, right, it wasn't a good time for me to take a trade, so I didn't do anything with this here. But if you're wondering, that level, if we had traded to this in London or New York session, then that would have been a different scenario. But since you traded to it London close, that's not the time I'm looking to take an entry, because London can also manipulate. If I enter here, right, we can open London, and that can also manipulate, and I don't want that, right? So that's why I did not take that entry. But this morning they've given an impulse leg, so I think it's just there. I don't want to chase it. Let's go on to these pairs here, the yen pairs. I think that's the one you want to be focusing on this morning. I have, you can see I have it two trades on these two, basically selling this rally, targeting this, and then maybe a run below that, but most importantly this. Okay, so it's a simple scalp. That's all the market is providing, so that's what I'm currently looking for. And then on the New Zealand yen, same thing. Down here, that's the imbalance. On the H4, there is an imbalance here. That's what it's reacting off from, but I'm targeting the one down here. And if you're wondering why am I selling, basically they have put in a swing high, a market maker sell model, right? We broke down, pull back, rebalance, gap, and then move down. So I'm looking for price to go down here. Okay, and I've also shared this with our group. In case we do get price to trade there, that's going to be a potential sell for us to go and attack this, and that hopefully we get an entry. I was preparing to send this one as well, but I couldn't finish it off to send to the group for everybody to take part of it. Maybe it might leave a gap in here and then trade back into it later on, but we are looking for price to trade down here. Going into the month of July, I am anticipating a continuation to the downside on the yen pair, so hopefully we will get an entry to continue in this direction. CAD yen, that's also pushing down, but I don't like how prices on this pair, so I'm not actually doing anything on that. And then same thing with pound yen. It did not make a high. It's a failure swing, right? It did not make a high. Euro yen did make the high, so this one is pretty much weak as well. Okay, I think we might see a drop down here, so that can also be used as a trade with potential partial out here. So if it does pull back to this level, okay, if price pulls back to that level, you can use it to target that low. Okay, so let me place that one there for you as well. Right, that's what we're looking for. And if you do get the entry, let's wait till this candle's low. If you do get the entry, partial out here, and then look for price to drop down there. Actually, let me just take screenshots of this and then post it in the. So for those of you on YouTube, you just have to take it as I'm giving it here. But our members, I'm gonna post all of that in the IT analysis. Okay, CAD yen, I don't like that. Swiss yen, that one has been posted, but I'm gonna post it again. So they are all yen pairs. Now one might be thinking, can I take all of them? And the answer is, why do you want to take all of them? Okay, they are all yen pairs, so you just want to pick one or two, preferably two, and then just stick with two. Okay, don't be greedy and take everything, because if it's wrong and you take everything, you're dead. All right, this one, obviously at the beginning of the week I showed you where I'm targeting. Okay, yesterday I managed to get myself an entry, and since then it's not really done much. So this is where I got, this is where I shorted my stop. I think my stop was above the imbalance on the H4. Yep, here. And I'm targeting down here. I wanted to send it to everyone, but I was not really convinced because of this gap. Okay, this gap and that down candle. I was not convinced with that trade yet, so I didn't send it to everyone, but I just took the risk. Okay, these are the things that sometimes decision has to be made on a personal level, so I took that personal decision to take the risk. So I'm in that trade right now. Partial is below this low here, and then the equal low. All right. Yeah, I wouldn't. The way it's dropping, right? I don't like it because this is where one candle can snap up and make a damage. I'm not saying it's going to do that, but I don't like the way it's dropping. I want to see big down candles going down. Yes. Well, that was one of the reasons why I didn't want to send it as well, because at the time of that entry, okay, I was seeing a market maker buy model here. Okay, so I was seeing this as a original consolidation. We pop, so this could be a retracement and then target this high and then probably trade into somewhere up here and then drop. All right, so yeah, I agree, because that's what I saw. So I just took the risk. Okay, sometimes you just have to take the risk. So I took the risk, and this is where we are now. So if I'm right, that will protect me. Okay, so stop loss at break even I'll do, and then I don't care what he's gonna do next. Okay, let's go back and look at these pairs. Okay, so euro pound, since Monday I kept saying this is where price is trying to reach for, and you can see they've taken it out. Now today is Thursday, and seeing this, let me go on to the H4. So on the H4 we do have this order block here. Okay, if we lose that order block, then maybe it might drop down further. So I don't want to see this order block defeated. Okay, I don't want to see that order block defeated. Let me zoom in. I want to see price find support here because my draw on liquidity is up there. Right, I want to see price go up there. So let me see. Yeah, I want to see price go back up. So maybe this can be an opportunity for a long, using this down candle as the order block for continuation. So in a sense, something like this, and then aiming for that with partial inside this imbalance in here. All right, it's all over the place. I don't like it personally, but I've been long since I think here. So I did take partial. I actually closed on what time? I woke up like 12 a.m. Not 12. Let me check what time I posted that image. Yep. 10 to 2. I woke up at 10 to 2, so 10 to 2 was somewhere in here, right? That's when I woke up and I took partial, right? And now price is back here, so it's, I think it should go back up, but it can do anything because of the current market condition. So whatever it does, no problem, but I don't want to see this down candle give up, and then we should continue going up. If it gives up, I don't know, I'll have to wait for more information. Okay. Gold, I think gold looks like we have a sell model that can come and attack this low with an objective at the order block here. Yesterday during the live session we caught a really nice 221 here on this candle. That was quick. That candle closed, we looked for price to hit that opening price and then attack this equal low, right? I think they will go back and attack this low. If you look on the daily, right, it's doing absolutely nothing. It's just taking out previous day's highs and lows and then rejecting. So that's the previous day's low, rejected, previous day's high, rejected. But all of that is happening inside this big up candle, so it's not high probability in my opinion. Okay, it's not high probability, so be careful trading gold. And oil, this is the one that I woke up the 150 and was it 150? Yeah, 150. Yeah, 150. And on the 1 hour chart, I checked my phone. It's like the market was calling me. 150, I checked my phone. This was what price has done. Oh, this is what price was doing, which is a gap that I highlighted yesterday after this impulse leg happened. So I posted in the chat in the community that there's a potential OTE on oil, but obviously looking at the time of the night, who will be up trying to take a trade. So that's what I'm looking at based on this H4. So let's see if that can give us a move back up again. And so this low to this high, I want to see do we go up. We have traded to this order block. Now at the beginning of the week I told you I was looking for this as a target, and then maybe a run down here, but this down candle here has given some reaction, taking out a short-term high, leaving an imbalance. So I'm keying up from this order block and this impulse leg and the gap as the framework for this trade. All right, Tuesday I wouldn't even bother, but because it happened on a Wednesday, could be the low of the week. And so far this is where we at. Okay, it could be the low of the week and then maybe a rejection, so it's worth taking that risk. I've actually taken it on a demo account. This candle's low as a target. Okay, if it doesn't work out, no problem, but even if it makes a new low, I've thought in the past that when priced at something like this, it can give you what? It can give you a divergence. Okay, when you have this impulse leg here, if it goes down one more time, it's gonna give you a divergence, and that divergence usually is what accumulation is, and then it's gonna pop up again. An example would be on this pair here, okay, where we had price makes this impulse leg, leaving a gap, it comes back down. If you buy it, it stops you out, right? Then that will give you a divergence in here, and then this is what you get, that pop. Okay, so on oil, if it does make a new low, you are going to see a divergence. So all you have to do is wait for some kind of a rejection, so you can, if you want to see how it will trade, study this study this yen pair, yen futures, and then it will give you an idea if it does make a new low, which I don't, I'm not saying it can. I don't want to see it do that, but in case it does it, you have an idea on how to go about it. Okay. Bitcoin, I'm flat on this right now. Okay, if you try to do anything, you will get yourself hurt, so stay put, then don't do anything. Okay. Indices, yesterday I caught some nice trades on this one. It's been a hard week, I'm not gonna lie. In our group today is today is the day I've actually sent one trade idea, because it's risky out there, and I don't want to give you something that is not high probability. Okay, but yesterday in here on the 5 minutes chart, there was a market maker buy model, and I got in here. Initially I took a sell and it stopped me out, and as soon as it stopped me out, I could see the buy model. What I was looking for the New York session was maybe a run down here. Okay, that's what I was anticipating with that drop that happened, right? So New York session, I was anticipating a rally, take out some stops, and then go and attack these lows, but that didn't happen. So when it broke up, then the chart came alive, showing consolidation, and we've just gone above area of accumulation. So I think I went in here. That was the second level of accumulation in here. So you can see imbalance, and I went long, and then that's what happened. My fill was at exactly 3 o'clock. Yep, this candle, and then price went attack this high. And then after going above this high, I started looking to sell short back down again. This is what I was anticipating, this very thing here. Why was I anticipating that? Because on the daily time frame, price traded to rejection block here. Right, price traded to that. On the H4, it was the last up candle prior to the move down. So on the lower time frame, as soon as we hit that, I sold short. but unfortunately price did not break any short-term low. Okay, you can see there was no break of a short-term low. So when it came back down and hit this, it rejected. So it came back and stopped me at break even, and I just stopped. And I didn't do anything because I was spending time with the family. I actually put my son to bed around 9, and I slept till that 1 a.m. and 1:50 that I woke up. And at 1:50 I saw price here, and that was a selling opportunity. It's just that, you know, that time of the night I'm gonna be selling, but that was a sell right there. What is it going to do next? To be honest, I don't know. But my bias is still to here. This is a trading range, this high to this low. So we are looking for a continuation to the downside. That is, you know, why I took this L here, right? But pumped up again, and now they've broken down. Do they go down? I don't know. Okay, the market is not in a favorable condition right now, so I'm gonna stay put. Maybe next week it will come alive again. Let's go back to the yen pairs, and for the next 3 months, all right, for the next 3 months, between now and between July and October, okay, I want you to kind of look at the yen pairs, all right, because yen is at all-time low. Okay, yen is at all-time low. We've not been here since 2021 December. So this could be, you know, an opportunity for smart money to buy in this market. I'm not saying it's gonna go up, okay, I'm saying keep an eye on it, because it could be an opportunity for smart money to buy very cheap price. Now retail will see this as a downtrend and they will be scared to buy it. So the only person, or you know, the entity that can push this up will be smart money. So you can start looking for smart money fingerprints to indicate that they are buying. And then if you see that, okay, because it's all-time low, look at what happened to oil in, I think, last year. $2020, right? All-time low, and then look where we are now. All right, so that could be the case for yen as well. Okay, so if you do start seeing signs of that, position yourself on the yen pairs and then just ride it. Okay, position yourself on the yen pairs and then just ride it. All right, so short and sweet. Any question so far? EJ, please, I didn't expect the sell-off. Yes, I did. I just want people to be careful with the buy, simply because this thing was trading at all-time low, so there could be a possibility of a rejection. Now on EJ, at the beginning of the week, I was bullish to go and attack this high, and you can see it came very close to it. We didn't take it, and then you saw that rejection. So with this rejection, maybe it's engineering equal high for some time later. Okay, it's engineering equal high for later. So we should see maybe a continuation to come back down this low to this high in discount. So you can do something like this, which is what I was looking for. All right, we could see a move from premium to discount. Right, so in discount somewhere down here, which is where I was pointing to as a target, or on the H4 somewhere down here. Okay, so this one and that one, and this one having the breaker there, and then this one with the auto block. That's where I'm looking for price to reach for. And then whatever happens next. Yes, I do see all of that. Okay, I did my analysis over the weekend. I saw all of that, but you just have to be flexible. Okay, if price is not doing it, don't force it. So it's not willing to go up there, so just follow what it's trying to do right now. Okay. All right. Any questions? And on this yesterday in the live session, afternoon live session, we caught a market maker sell model on this one as well. The target was this 15 minutes imbalance. So at 2 here, we anticipated price coming for here, and then potentially this equal low as well. And I think I'm not sure if I posted that. No, I didn't post it, but that was a break. Oops, that was a break, and pull back, drop down, sell, and there, another sell. If you do see it, right, it's a beauty when you see the market make a buy and sell model. But that was really nice. Nasdaq is the same thing. I do have a lot of markings on there. It's the same narrative on the S&P 500, but I didn't, like I said, I didn't focus on this. I focused on the S&P. In your opinion, market makeup, buy and sell model versus Power 3, which one has a higher rate? I think Power 3, if you have your direction right, has, because Power 3 is happening every day, whether you see it or not. Okay, power of 3 is happening every day, whether you see it or not. There's always going to be open. So every single day, it's a power of 3. Open, manipulation, expansion, close. It just happens to be, if you see it with the right direction, then you trade it. So, it's not a question of the higher rate. One is happening every day. You just have to be able to predict the direction. With the market maker buy and sell model, that's also happening every day, but do you see it, right? If you don't see it, then you can trade it. But there is a way to there's a way to kind of identify the market maker buy and sell model. If you practice it much, it's happening on literally on all time frames. Okay, it's just a matter of, do you see it? Because I can go onto the 1 minute chart and give you a market maker buy model in here. Okay, last one here. How is the market maker buy model? Well, we have this as a consolidation, break, distribution, 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 smart money reversal, low risk buy, accumulation, accumulation, and then it goes and attack that one. So that pattern is happening all the time. It's just a question of, do you see it? So none of them has a higher rate because you're not trading all of them. Okay, you just have to know and pick one and then trade one. If you can incorporate both of them, say if you can see both of them happening at the same time, then that gives you it gives you the, I'll say, the power to be high win rate, because if you can see both, like sometimes I do, not all the time, but sometimes I do see the power of 3 and the market maker, so it becomes a really high probability trade, like I did with oil. Was it last week? Right, last week's sell that I caught, that was a power of 3 on a weekly basis. Okay, power of 3 on a weekly basis, where the market opened, it rallied, and then it dropped. Okay, so the power of 3 was for the weekly range expansion. So we open here, we rally, and we drop. So that was power of 3 on a weekly time frame, on the weekly expansion basis, and it was a market maker sell model. Okay, so we had the consolidation here, accumulation, accumulation, and then we reversed, and I saw short here, and that's where we at. So it depends if you can see both of them, and then you combine it, and then you trade it. All right, any last questions? It's not actually using both, it's just understanding, because both will be there, but do you see both, or do you understand both? Because the market is going to open, it's going to rally, it's going to drop, it's going to open, it's gonna drop, it's gonna rally. So when it's rallying, there is a market maker buy model. If it's dropping, there's a market maker sell model. That's how the market is moving all the time. So it's a question of, do you see it? Because it doesn't add anything to your trading, it just adds confidence. Because if you can see both, then you be confident in your trade. If you can see one, yes, you're confident because it's also powerful on its own. Okay, they have left a gap. So yeah, I think it's still valid. OTE now would be ideal. Yeah, OTE still brings me to that entry, so that's fine. OTE 50%, that's also fine. Okay, 50%, that's also fine. How do you determine the reversal in market maker XX model? Based on the high time frame, there has to be a high time frame level, right? So if price hits the high time frame level, then you can anticipate a reversal based on the trend. So if, let's say, this was a high time frame level and then we break down like this, then I'll use this as the reversal. So you're not always gonna catch, it's not even necessary to catch the reversal. Okay, just wait for it to reverse and then start looking for where ideally the setups are going to form. And if you study, you will know where they're going to form, so then you wait for them to form. You don't have to catch the reversal, you don't even have to know where it's going to reverse. If you do a lot of practice, right, the pattern itself will jump at you, and once the pattern jumps at you on the chart, immediately you're gonna know where the setups are going to form. So you don't have to necessarily know exactly where the reversal is going to form. Just practice seeing it over and over and over again. So what I do is I have a journal that is just for market maker profiles. So I have the buy model and the sell model, and every day if I see one, I take a screenshot and I put it in there. Every day if I see one, I take a screenshot and I put it in there, and I've started sharing that in the community, not in the free channel, in the VIP members. They have the ability to see it every day, because when I see it, I share it, and then over time, what that is gonna build is you're training your eyes to see it, right? And then it builds. It's like a pattern in your mind that will be easily identifiable. If price has taken an external liquidity, how can I confirm it's gonna work? I want a second confirmation. That's always going to be dependent on it's going to depend on the time frame. right? When you say external range liquidity, okay, we have a spammer in there. There you go. That person has been blocked. All right. As I was saying, it depends on the time frame that you are actually you are looking. Okay, because external range liquidity can be a 1 hour high, a 1 hour low, H4 high, H4 low, right? So you have to be kind of what's the word? The words have escaped me. You have to be specific with the high or low, which time frame, because the time frame is going to determine whether you need a confirmation or not, and the kind of trade you are looking to trade. So if, let's say, price takes out a weekly high, right, then probably you might want to look for the 1 hour to confirm the change in price direction. Or if price takes out a daily high, you might want to use a 15 minutes or a 1 hour to confirm the change in direction, right? So you need to be specific on the time frame. Let me show you an example. An example would be is there an example? Was it yesterday? Okay, so let me find the example, and then I think yesterday the S&P 500 was the example here, right? The reason why I changed and bought it because of the market maker is this low here. Okay, that low there. Okay, that was a previous day's low. So previous day's low taken on the 5 minutes chart, and like I said, I did not see that. I saw it later on, right? On the 5 minutes chart we had right, so that was a break in market structure or a shift in market structure. Now there's a difference between a shift in market structure and a break in market structure. This one will be a shift in market structure. So using this as external range liquidity because it's a previous day low, a shift in market structure here, the pullback. All right, the reason why I did not whoever this is needs to stop. I can't block them, I can only report. kind of, I need to, but don't worry, it's being removed. But at the moment, all my all my support, they are sleeping. My support is in a different country, so they are sleeping. There you go, he's gone. Okay. The reason why I did not see this right as a shift in market structure at the time when it was happening is simply because the move wasn't explosive enough for me. Okay, the move was not explosive enough for me, hence I didn't see it as a shift. But the moment they broke above this side with that energy, that if I had seen this here, then that would have been a complete different scenario. But it happened to be here, so then I have to shift. So with the external range liquidity, with that shift, that gives me a buy to go up there. All right, so for your question, for confirmation, you're gonna need to know the time frame. What external liquidity is it going for? Okay. All right, let's go and check out oil. There you go. That has given us a nice auto block with a fair value gap. Okay, any more questions? All right, I think I've managed to answer every question. So it's almost 10:30. I'm gonna go and enjoy some sun, and then I will see you guys next week Tuesday for those on YouTube, and for our members I'll see you later at 2 p.m. and tomorrow. All right, enjoy the rest of your day, and I'll see you guys soon.